Good morning, everyone, and welcome to the AMC Making Tailored Investment Strategy Tradable. My name is Stefan Wagner. I'm the host of the NALO Finance podcast, and I also lead the business development at Vesta. You might have heard us. We're a Swiss fintech who do actually make softwares for issuers. So some of the gentlemen here I know quite well. Before I introduce the panelists, one sentence to frame the topic. I suspect most of you actually know what AMC is, but just so there's hundreds of different names out there. We're going to use the word AMC, actively managed certificates. And it's basically a structured investment vehicle that packages an actively managed strategy into a tradable security, combining flexibility and asset selection with the efficiency of structured product infrastructure. To discuss this powerful format, I have a great panel here today. I would like to introduce you, Philippe. On my left, first is Alberto Turra, Managing Director and AMC Product Owner at Leontech. He leads the global development of actively managed certificates and brings a very deep experience from derivatives, sales, and structuring roles. I think we're going to hear a bit more, particularly what happens also outside Switzerland. All the way at the end, I don't think I need to introduce you. It's Philippe, co-founder and CEO of Gen2. He's a serial entrepreneur with more than 30 years in investment, merchant banking. Gen2 is definitely redefined how investment strategies are manufactured, and particularly what can be invested in. Then we have back here, Erwin, Näscher, Head of Sales of a structured product at BCV. He brings a great perspective of a highly rated Swiss cantonal bank issuer, combining balance sheet strength with deep structuring expertise. And last but not least, Silvan Räber from Luzerner Cantonal Bank works directly with asset managers and banks and family offices, translating structuring innovation into real-world client solutions. Please join me to welcome the panel. Just as a quick icebreaker opening in one sentence, AMCs are powerful because they allow you to?
Well, they allow us to deliver solutions for our investor quickly. We can capture our customer base that already existing and allow them to scale that up in a very efficient method.
And to simplify the portfolio management with one single ISIN.
They allow you to turn your own investment strategies or idea in an own product, and this very quickly and efficiently.
It's the most efficient way to work with strategies and assets.
Okay. Silvan, maybe I can start with you. I mean, historically, equity baskets were the traditional underlyings packaged or securitized in an AMC, but that perception is pretty much outdated now. What do you see is happening in there? What can be put in there?
Yes, of course. So equity-based AMC are still very important, and often customers start with an equity-based AMC for their first one. But I mean, we have thousands of underlyings in our title universe, and you can choose between, of course, equity, but you can also have bonds, ETF, mutual funds, derivative, and even structured products as underlying. And perhaps 3 different points I would like to mark a bit. First of all, with ETFs, you can invest in pretty every asset class, even if a direct investment is not possible at the moment, for example, commodities. Then you don't have to limit to just one asset class, so cross-asset portfolios are getting important even more. And you don't have to limit to one. You can choose your own strategy. You can build up your own portfolio, like Balance, Grow, or the famous strategies in one AMC. And perhaps the last one is you can even build an AMC on other structured products. I mean, we talk about AMC, but with BRCs, barrier reverse convertible, we have still the product which is used the most. And normally people invest in 1 or 2 barrier reverse convertible as still of a satellite approach. And with an AMC, you can invest in a strategic way in this topic. And this is very interesting to have an AMC on different BRCs on a single level, which allows you to have a diversification also in this topic.
Okay, thank you. Erwin, I mean, you guys have issued more than 300 AMCs of the platform. What is sort of beyond equities and structured products, which we clearly see on our platform as well, is quite preliminary, which underlying gaining tractions on your side? Yeah, and what is driving that change, you think?
So it depends on the needs of the AMC, what you do with the AMC. If it's to simplify the management of your portfolio, it's mainly driven by equity, or before it was bonds, but now with the current interest rate, it's not really interesting anymore. But when it's come to test a new strategy, people are looking for something different. Equity are quite topish at the moment. Interest rate, as I say, it's low, so there is a need of alternative investments. So bonds is not a question anymore. So people are looking for a distribution to get an income. So there is a different way to get an income. They can put a short call overlay in the strategy to generate an income. Or there is also a way using real estate funds. It's quite interesting at the moment. And also, if the client wants to play the dispersions, we see more and more AMC on hedge fund usage.
Hedge fund indices?
Yes.
Oh, yeah, excess, okay. That leads me a little bit to Philippe. You've been sort of at the forefront of securitizing non-bankable assets, put that way. Can you maybe give the audience an example of what wasn't possible probably a few years ago, what can be done now?
Maybe I first want to start with who manages or trades or holds an AMC here in the room? Okay, you are heroes because you use the most efficient product in the market. You can structure anything, any strategy, and any asset through that. And today, only for FINANZ, you can do that for free with Gen 2. First year for free. So that's a world premiere to start there. And it doesn't stop there because any asset, as you said, in assetization, as we wrote the book, and you can get one of those at our booth as well. You see, you can structure anything, and you see that mostly alternative assets come with that into portfolios, strategies on alternative assets, and we see mainly in private equity, private debt, trade finance, and of course also alternative portfolios that this is now the trend, and it will open diversification, assetization to the planet.
Mm. I mean, the AMC pretty much has been sort of a Swiss success story that has gone global. I would still estimate probably at least 60% of all outstanding or is actually being booked in Switzerland. Alberto, you have sold, structured products in AMC across multiple jurisdictions, so outside Switzerland as well. You've seen actually what investors ask for, not just what gets market, but which underlyings do you think are most underused in AMCs today, and what's holding it back from
Yes,
a global view?
I have to say that we, in a global coverage of distribution, I mean, Switzerland, it is the center of attention. I think everything started here. There is a very supportive framework that allows distribution. I think investors are getting more and more familiar with the construct. It's a very good exercise. I think as before we were mentioned, we were discussing the possibility to include the structured products inside. And I think what clients are now demanding is not to depend on the AMC issuer, but use that as a gateway to access other issuers to diversify the credit risk further. And this is a construct that is ever increasing popular because each issuer has its own also characteristics and competitiveness in certain asset classes, in certain repackaging solution, which ultimately can be contained in the issuer of choice.
I'm going to speak louder than, okay, sorry, I'm back. I mean, as you probably heard now, the AMC is an incredible flexible product. Pretty much, there doesn't seem to be any limitation what can be done with it. But that sort of leads then to the next question. How does this thing actually compare versus a fund? Because that's, it sounds a bit like it. And maybe, Philippe, I can ask you that one. So AMCs and funds are both vehicles for pooling and managing assets. So what fundamentally sets them apart in terms of structure, regulation, and investor rights?
It's of course a different legal framework, but I would call that the AMC is the Swiss version of a fund. And I would also say it's the more popular product in Switzerland than funds. So certainly in creativity it is, and with that said, I think we have to really appreciate that, because that shows the quality of Switzerland, of the infrastructure that we have, the flexibility we have, the rationale to it, and the proficiency. And from that, it's not a collective investment scheme, as that makes a lot of difference in administration, in time to market, and certainly in efficiency.
Okay. I mean, one thing I want to clarify, that, so you probably know that, but AMCs can be either done on balance sheet, issued off by a structured products provider, like BCV, Leontech, Luca Bay, but also off balance sheet, which is yours. And there's obviously certain things that need to be considered when it comes to credit, or what do you expect? Erwin, maybe you can go in this, BCV issues AMCs on balance sheet, what does this mean structurally, and how does it differ from off-balance sheet issuers or SPV-based ones?
Yeah, well, onshore AMC has a name when you issue an AMC, you have the hedge on the underlyings on the balance sheet. So on a legal standpoint view, it's a debt for the client. So if it's a debt, there is a credit risk to take into account. So that's important. Why it's really important to consider the rating of the bank. I'm not sure that if any of you know the rating of BCV. I'm not sure that you know BCV as an AMC provider, but we are quite well positioned for that reason, because the credit risk with BCV is not really a big problem. We are among the top 20 most safe bank in the world. So it's the credit risk with our client base, not really an issue. But if it's an issue, there is still a solution for that. It's the TCM. So you just put the collateral, the SIX exchange, just to reduce the credit risk. So in that matter, in that characteristic, it's the best of the two worlds. So you can benefit of a legal onshore entity and the benefit of a credit risk from an off-balance sheet AMC.
Yeah, I mean, Alberto, that's sort of where Leontech has, developed I think you call it ETP Plus. Maybe you can explain a little bit what you do there with the credit rating and what it allows you to. It's not only the credit rating, but also the listing that it is allowed with it.
Yes, absolutely. I think this is based on client demand mostly. I mean, our MCs are listed on SIX upon request, but also collateralized with TCM, as Erwin was mentioning. And then the collateralization with TCM already is, I think, a very big comfort for the investor, because you collateralize, of course, the mark-to-market value of the MC. But then there is another element associated with it, which is the accessibility. When you look at the comparable, that we need to be very careful, but ultimately look at investment funds, mutual funds, the market access, or all the way down to ETFs, it's the fact that they are listed in multiple exchanges. You have authorized participants that are doing market making. And the concern for some investor is literally the liquidity of the MC itself. And obviously, all the issuers like myself, like the people in this room, we offer intraday liquidity, but ultimately is the concept of listing accessibility that ETFs are still more structured than MCs. And for that reason, we start tackling that with what we call the ETP Plus because it's actually a non-balance sheet issuance, which is TCM collateralized. But I think the key element is the listing access. So these elements, these instruments have a little more stringent kind of the perimeter compared to MCs, but they are listed on multiple exchanges at once. So we're talking about Swiss and German exchanges. And of course, the goal is really to bridge even further the gap. And I think all the efforts that the different players are doing in the industry is bridging even further this gap between the MC construct as a structured product towards the comparable ETF or mutual funds against it.
Thank you. Silvan, I mean, Luca B is probably one of the best rated issuers, AA+, I think S&P, if I'm not mistaken. How does this shape the conversation with the investment manager and the investors? And sort of what role does the credit play in this conversation?
Yeah, I mean, as you said, so our rating is our big plus, the AA+. It's a key factor of our AMC business, and yeah, the credit risk is real, and you have always to show the clients what it means. And yeah, as people are all a bit the same. In good markets, you always forget that there's a risk, but the past has shown us different examples where we can see that this risk exists, and so we can just show the clients that this is important and what we have. And if I would be a client, I would be very concerned to the issue risk. And yeah, here we are with a AA+ rating and the state guarantee of the Canton of Lucerne.
So choosing the right AMC issuer is important to look at what credit exposure you're taking, because that's probably one of the big difference versus a fund. So maybe we can go a little bit deeper into how to choose the right AMC issuer. Erwin, maybe you've been on the issuer side long enough to see what goes wrong when the fit between investment manager and issuer isn't right. What's the one question an investment manager, or even more, if you have want to share more, before signing, what they often forget?
Yeah, I think you said in the question the fit. The fit is really important, and I think that many clients forget to ask. They have to ask themselves first how they feel comfortable with the AMC, with the issuer itself. I think we belongs, BCV, Leontech, or LUKB, belongs to the client base. I'm sure that my clients feel comfortable with BCV because we are stable, we are well established, we have a nice rating. And, but it's important to ask them first, are you comfortable to live over 5 years on open ends, even more, 10 years, to live with one issuer and to be living like being married with one issuer, and would be happy to see any bad article in the press or any bad results or anything. So it is really important to ask yourself first, do you feel comfortable with the issues? And then when it comes to sign the contract, many clients forget to ask also the issuers, what about the execution quality? Because all of the clients are pushing for the management fees, are pushing for the rebalancing fees, just to reduce the fees, so it's just getting a commodity. They want an AMC for 5 bps less. Everyone can offer for 5 bps less. But the execution quality differs from issuer to another issuers, and that's very important for the equity, for the bond parts, for the ETF, for the options, and that's key, and it's key also for the performance of the AMC itself.
Thank you. I mean, that's sort of a view from the investment manager side. So maybe investors and vendors sit on the different sides of the AMC. Their priorities when choosing an issuer are not the same. What are the most important questions an investor should ask themselves before investing into an AMC?
Yeah, that's interesting because now we have one party more on the game. We have the issuer, we have the investment advisor, and we have the investor. And the investor have to have a look on 2 levels because we have an issuer on one hand side and you have an investment manager on the other side. So you have to look on both of them. Of course, the issuer we already discussed is the credit risk, but it's also the secondary market. I mean, an AMC is launched very quickly, as we heard many times before, but how is it if I would like to sell my assets or if I would like to sell a part of my investment? How is the quality of the secondary market of this issuer? Is there always a size I can sell? Is there always a narrow bid-ask, always in or also in shaky market? This is also an interesting topic. Not only go into the AMC, but also how, if I would like to sell parts of my investment. This is based on the issuer. But also you have to look at the investment advisor. I mean, not only because he has a product, he has the knowledge of this. So you have to choose the investment advisor which has the knowledge of the product. Only a known product doesn't mean at all that I have any knowledge in this one. And especially if I have a topic which is very specific, I have to choose the right investment advisor. And then, of course, the terms of the product is also very important. How is it? How are the fees? How is the structure? And everything like this. So you have 2 sides, 2 levels, and you have to have a look on both of them.
I mean, Alberto, I mean, AMCs is not really, besides maybe South Africa, it's not actually, it's a legal definition, it's a brand name in a sense. They're probably quite treated differently across jurisdictions. You know, how does the investor and, let's say, regulatory perception differ internationally? And what is the one question investment manager must ask any issuer before signing?
Yeah, look, it's a very big challenge. I mean, I spent myself for 20 years in the UK before joining Switzerland, and I have to see that here you enjoy a framework that is very sophisticated. You have the luxury of having a regulator that is really pro-business, understands what the challenges of the issuer, that helps the issuer make sure that they follow predetermined path that ultimately complies and protects the investor. But it's a very sophisticated conversation. It's something that you can really then rely on. Certain pockets like South Africa that you mentioned, and we discussed this in the past, I mean, it's really interesting to see how structured the support that they're getting from both the regulator and also then the Structured Products Association of the country. I think the real challenge now is to use, and I think that's a responsibility that somehow Switzerland has inherited, is actually to ensure that the construct is well delimited, is well supported, and then transfer to other jurisdictions that are slowly adopting or considering clearly AMCs as a solution. The demand from investor, I mean, we have a global coverage, we get it in every jurisdictions. Asia, of course, is topical, Middle East as well, but when we look at the more difficult ones, the retail distribution in Europe, for example, there are players already active in the space, but the confines and the boundaries are still very lax, and the regulator is very hesitant. Somehow they start from the retail distribution, they start blocking that, they start really putting boundaries of where, issuers should not venture. But it's very difficult, then to translate the Swiss construct outside into the European Union. And this is a big challenge. I mean, we hope to see progress. And the more we do panels like this, the more we talk about it, the more we socialize, the more investors see demand and they transfer it abroad, the better it is for the industry.
No, couldn't agree more. Philippe, I mean, Gen 2, you deliberately chose to use an off-balance sheet vehicle for the AMC issues when pretty much everybody else in the Swiss market was doing it on balance sheet. What drove that choice, and what should an investment manager know and ask themselves if an off-balance sheet vehicle is the right for their strategy?
Yeah, I mean, I compliment certainly my colleagues here on stage, because all of the issuers of AMC or traditional issuers of AMCs did an amazing job in preparing this market and expanding this market and certainly living up to that. But it needed a next generation of that, and the next generation of that, I grew up through the times of 2008. We saw Credit Suisse failing. It's almost still present what can happen to ratings and how they can be judged in reality. But fact is, look, fully funded, your control, you're in the driver's seat, you controlling the vehicle, you controlling the assets in there, and you have that fully funded. It's just something that made sense to us, that led to a next generation, and I think it counts for how people deal with us. People want to be in the driver's seat, and they want to have flexibility, and they want to have choice of partners, and that's just easier and much more reliable and not depending on any counterparty risk when you do that off balance sheet and fully segregated and dedicated to this client. And that's how we try to approach the market. That's how we try to approach the world. And with that also, that's how we have the conversations with our clients. It's trust.
Thank you. Erwin, I mean, that's a little bit sort of coming back to the regulatory side. From your position as an on-balance sheet issuer in Switzerland, how do you feel the regulatory environment is developing for the AMC? Is it tightening, or are regulators starting to embrace the structure?
Well, I think on the regulatory framework, I think one point which is important, I think, for the EIM here is the new circular of the FINMA. It doesn't look really sexy, doesn't look really appealing, but this name is quite important to know, to understand that today it's a duty to inform your clients when there is a 20% concentration risk in the issuer within the client portfolio. So the diversification is getting even more important now. It's always been important so far, economically speaking, but now on the legal side, it's getting even more important because FINMA is telling you you need to diversify. And that's crazy how many clients have 4, 5 AMC with the same issuers. So I can only congrats Leontech, LUKB, and all the issuers because they did the job for me before. And now we're expanding the market in the Swiss German part, and I'm happy to identify these investment managers and to say, here I am. I'm here to diversify with high quality issuers, with a nice rating, and it's not only me telling you that you need to diversify, but FINMA tells you the same way.
Okay. So probably more issuers could come in the market to help with the diversification.
Yeah.
I mean, Philippe, after years of championing the AMC model, do you think there's still big misconceptions out there, and what do you think they are?
I think there are misconceptions, but look, there are so many players that are also in the room, like ISP, Incor, IB, Luma, and I could name many more that are present here that help and take a very strong statement to that, that an AMC is just a more flexible product and a more rational product than other strategic approaches that you can take through funds and everything else. So I think the big misconception is just that it is most probably easier than everything else, and most probably easier to use than everybody thinks.
Okay. Alberto, maybe coming back to you a little bit on the regulatory side. As you see it across different regions, are they treated differently? I mean, Switzerland that often define a structured product. Is that the same thing in other countries, or how do they approach it?
Yeah, it's a very, very big debate, actually. I think in Switzerland, South Africa, some other jurisdictions, it's pretty clear what an MC is, very clear. You have rules, you have guidance, and it's nice. In certain jurisdictions, like Hong Kong, Asia in general, that is actually quite okay, I would say. It's actually funny, recently we've been looking at the Middle East, and there is a notion that structured products can be considered funds. And I found myself, I do this business for 20 years, and really debating actively, why is that possible? Because the only thing I know, structured products are really not funds, and there would really be a big gap. But there is an nitty-gritty aspect of the law in each country where, they are not that documented, not that explained. As a result, they are open for interpretation. And that's where we, the point of, using, what is our best argument is that look at the other players in the street. And we look at how they issue the product, and we do the same, and we're all aligned. And if we have 4, 5, 10 players out there issuing a certain way, going the extra mile to explain to investor that this is a structured product, it has the characteristic of a structured product, there is an element of time where the regulator will finally understand and amend and create a specific framework in a specific jurisdiction to contemplate for MCs.
Yeah, but I think in the EU, the different countries interpret slightly. I think Belgium is probably one of the most conservative versus other countries. I think we have only 10 minutes left, and I want to maybe give the chance also the audience to ask some questions. Is there anybody who would like to ask a question to the panel? Can't hardly see. Okay.
Too early.
Too early. Okay.
In the morning. More coffee.
Let's get him. Okay. Okay. Then I'm going to continue with my questions. You guys, I have a few more. Philippe, Gen 2, you basically built that on the conviction that every asset should be investable. I think that sort of is, if I can paraphrase what you say. Looking ahead, which asset class or market developments do you think will drive the next wave of AMC development?
Yeah, we see all different parts, digital assets, traditional assets, and of course also alternative assets driving it, and it's hard to choose from. I guess it's more what really is relevant to our client base, what they want to drive, where they have their expertise and where they want to diversify and open up market for their investors, for their audience, with their clients. Finally, we often forget so easy in finance that the investors drive the markets and not the regulated entities. And so I would say I would leave that up to them. But I guess the magic of it all is any asset can be investable. It can be put and managed through a Swiss security by Swiss standards with a Swiss ISIN and brought into portfolios. And I think that's an opportunity for everyone to take. And I would say, if I would have a preference, I would just say, surprise me.
Okay. Silvan, maybe I should have asked you then, because he said it's driven by the investor. From your conversation with asset managers and family office, what shift in client demand or behavior do you expect or see happening in the AMC market?
Yeah, we see more and more a shift to the very easy structure to more sophisticated one, like I said at the start. It often starts with an equity-based AMC, and today you don't have to use 5 different AMC for one portfolio management strategy. You can do it all in one AMC, which is very easy to manage. But what we also see on the other side is the first one is always the hardest one, because you as normal, you have a lot of questions. Am I able to manage it? How much time does it really need? And after you have one AMC and you manage, you will see how easy it is. It's really, you have a platform which is internet internet-based. It's like your own e-banking which you log in, and you don't manage your own portfolio, you manage the AMC, but it's pretty the same or even easier. So normally it doesn't end with one AMC. And on the other side, a topic that I feel with a lot of external asset manager is that they have, of course, they have their client, but there are also their kids, their heirs, and they would like to implement their strategy as well. But it's much more difficult because their portfolio are smaller. And here with an AMC, you can manage this also in a very efficient way.
Yeah, no, I mean, we have seen this on our platform as well, that once somebody's over the line happy to use an AMC, I call them, they become repeat offenders, basically. They keep on using, but the challenge is first to get them over the line. Erwin, from the issuer seat at a Cantonalbank, what structural or market development are you watching out most closely, besides my circular now?
Well, we're watching what's the development, but something which is still important, and you mentioned one, it's a platform. I think the platform, it's key today. As I said before, AMC is a commodity business. All the fees are quite in line, but what makes the difference is the user experience, and each platform has these different characteristics and different user experience, and it's also key. And we have developed a proprietary platform to manage your AMC. You have this flexibility. We have the flexibility to develop the platform quite fast. We take the needs of our clients in consideration, and we put it in the new development in the next years. So that's key. That's important to feel comfortable with the platform itself, and I think that's something that it's a key difference.
Yeah, I mean, I can only echo that one from our side at Vesta. It's incredible how many new features we constantly need to deploy. I mean, I think it reflects how flexible the tool is at the AMC versus what you then need to build around it to manage it around it. Alberto, you have sort of a rare view again across all multiple markets and jurisdictions. What are the 2 or 3 trends you think will be happening now out there?
Yeah, look, I think, I mean, we discussed before, clearly the credit rating of the issuer is very important, right? You know, but obviously, I mean, as an issuer, you depend on what you have. And I wish I had the same of Lucabe. We don't. We're working on that. But ultimately, it's an element of then being flexible and say, okay, what we do best is structured products, derivatives. We are ultimately a derivative house. So we thought, okay, our client base comes to us, and of course, if they have a very vanilla location in mind, they can literally cherry pick because everyone is doing there. Where we try to offer a bit of unique advantages on the derivative side. So these are a bit the trends we see, we try to capture. In the same way that, you know, for example, in the private market space is something that will not fit our balance sheet, and I think for any bank in the street today, it's quite costly to hold that. And that's the reason why the other construct of balance sheet are more efficient. And I think it's, to be honest, I'm quite proud of seeing like how this AMC world is evolving in different channels, because ultimately at end is what the investor wants, what he needs to do. And we are all trying to tackle where we, you know, using what we are best at and deliver on that. So the trends I see is literally adapting to what clients are looking for based on expertise, and sometimes, you know, we are very open on the feedback we see in the street. We can guide the investor to what, you know, they find best. I know there are experiences now. Look, if you look at the comparable, the structured products world that we know very well, there's been a proliferation of tools that allow investors to choose the best issuers and the best conditions. And I think it's a matter of time, and I know some players in the room actually are starting in that direction to offer that to clients, to say, look, I don't have to offer only mine. You want to have an environment, a place where you input what you're looking for, and I want to know which one is best, even if it is outside your platform. Because in the end of the day, it's still a value that you offer to the investor, which then gets to come back to you as a one-stop shop and say, look, you are a specialist in the field. I want to talk to you and help me find a better solution.
Yep. Do you think it will follow the structured products development?
I think so. I think there is going to be a proliferation of platforms, you know.
Yeah, I would expect that as well. You're not the first one mentioning that one. And also, I can only echo the use of structured products inside an AMC definitely has gone up. I mean, probably 6-7 years ago on the platform, we hardly saw any AMC using it. Now it's probably a third of products have a structured product inside it.
Yeah, and what I noticed compared to I think it's a bit of a new trend, is also, I mean, private banks, we're not a private bank, so that's a bit outside of my sphere of expertise, but a lot of investors, high net worth individuals, ask the private bank to provide leverage, LTV. And this is something that they always struggle because it's sometimes in combination with the risk appetite of the bank. Sometimes they want to clearly keep it as low as possible, but then the risk losing to competition. And we saw that within the AMC construct, if you are able to provide leverage and LTV within, we have derivatives construct, then ultimately helps also our private banking clients to serve the need of the customer while retaining a very conservative risk profile on their end.
Yeah, it's definitely coming back, the leverage inside the AMC. It used to be popular in Asia, now I see it. It was for a while, then suddenly everybody pulled back, but it's definitely coming back into it. And it's an interesting revenue source for the issuers.
Yeah.
Well, okay. Thank you very much to the panel. Thank you very much. If there's any more questions, and potentially, otherwise, I would like to thank the whole panel, and you can grab these guys outside. I'm sure they're going to hang around for a while, or if you want to speak to me as well, I'm going to be here for a while as well. Thank you.
Thank you.
Thank you.